Bitcoin's next big breakout might be closer than you think. With market uncertainty and economic shifts unfolding, many investors are wondering, where's the bull run? If history has taught us anything, it's that major price surges often come when least expected. But this time, there are powerful financial forces at play that could be setting the stage for Bitcoin's next explosive move. From Trump's tariff strategies to the shifting dynamics of the altcoin market, the financial landscape is rapidly evolving. We're seeing record-breaking memecoin dominance, weakening altcoins, and new warning signs that the market may be approaching a peak. Meanwhile, institutional investors and macroeconomic factors could be pushing Bitcoin towards a defining moment. Are we about to witness another cycle surge, or is there more turbulence ahead? Welcome to the Chainpoint channel. In this video, we'll break down everything you need to know about the current state of crypto. From financial warfare and policy shifts to the latest market trends, this is your ultimate guide to staying ahead of the game. Let's dive in. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. The global financial landscape is shifting, and former President Trump is once again at the center of controversy. His recent push for increased tariffs, discussions on a sovereign wealth fund, and potential shifts in Bitcoin-related policies are making waves. These maneuvers could have far-reaching effects, not just on traditional markets, but on crypto as well. With rising economic tensions, Bitcoin's role as a hedge against government policies is becoming more apparent than ever. Tariffs have historically been used as an economic weapon, but their unintended consequences can be just as powerful. If Trump pushes for higher tariffs, it could weaken the US dollar, making alternative assets like Bitcoin even more attractive. The prospect of a sovereign wealth fund, something the US has never had, could also impact liquidity and capital flows. If structured properly, such a fund could shift investment strategies, potentially increasing demand for decentralized assets. Meanwhile, Bitcoin's regulatory environment remains uncertain. Trump's past skepticism toward crypto raises concerns, yet his unpredictable nature leaves room for speculation. Could he pivot and embrace Bitcoin as a tool against central banking policies? With the Federal Reserve tightening monetary policy, a policy shift in favor of crypto could change the game. Many investors are watching closely, wondering if Bitcoin's next big rally will be fueled by unexpected political moves. As financial war strategies continue to unfold, the implications for Bitcoin and the broader crypto market remain uncertain. With increasing discussions about monetary control and policy adjustments, the coming months could be pivotal. Could this be the spark that ignites the next bull run? Bitcoin's price action has been anything but stable, with recent drops shaking investor confidence. The leading cryptocurrency has faced multiple pullbacks, at times dipping by 9%, leaving traders wondering if the bull market is truly underway. But Bitcoin isn't alone. Ethereum, XRP, and Solana have all taken hits, with losses exceeding 20% in some cases. Meanwhile, smaller altcoins have been even more vulnerable, experiencing declines of over 40% in just a short span. Market uncertainty has been fueled by macroeconomic conditions and investor sentiment. Rising interest rates and tighter monetary policies have driven liquidity out of speculative assets, including cryptocurrencies. While Bitcoin remains the dominant player, its volatility has raised concerns, leading many to adopt a wait-and-see approach. With no clear catalyst for a breakout, the market continues to hover in an uncertain state. Ethereum, despite being a top contender, has struggled to maintain its footing. Currently trading at $2,700, it would need to close at $3,600 to confirm a bullish reversal. This uncertainty has also affected investor confidence in the broader altcoin market. The decline in activity has been evident, with fewer major rallies and increased skepticism from both retail and institutional investors. Despite these setbacks, the crypto market has historically been cyclical. Many analysts argue that this period of decline is part of the natural ebb and flow before a significant price recovery. Ethereum's struggles are becoming increasingly evident, with several factors contributing to its weak performance. High transaction fees continue to be a major roadblock, making it less attractive for everyday users and developers. While Layer 2 solutions like Arbitrum and Optimism aim to alleviate these costs, they have not yet been able to fully resolve the scalability concerns plaguing Ethereum. As a result, competitors like Solana and Avalanche have gained traction due to their lower fees and faster transactions. Another key issue facing Ethereum is its reliance on developers to maintain and innovate the network. However, recent data suggests a decline in developer activity, raising concerns about the ecosystem's long-term sustainability. Many developers have shifted focus to emerging blockchain platforms offering better incentives and lower entry barriers. This migration has led to slower innovation and delays in key upgrades that could improve Ethereum's performance. Liquidity fragmentation is also playing a role in Ethereum's decline. With various DeFi applications, NFT marketplaces, and staking solutions operating across different Layer 2 networks, capital is becoming increasingly spread out. This dispersion weakens Ethereum's position as the go-to blockchain for decentralized applications. The shift in liquidity to alternative platforms means that Ethereum must find new ways to regain dominance and attract fresh capital inflows. Despite these struggles, Ethereum remains a major player in the crypto space. However, the road to recovery is far from clear. Will Ethereum be able to address its key weaknesses and reclaim its position, or will emerging competitors continue to erode its market share? Meme coins have taken the crypto market by storm, overshadowing traditional altcoins in trading volume and market interest. Platforms like Pump Fund on Solana have surged in popularity, attracting traders looking for quick gains rather than long-term investments. This sudden shift in liquidity has left many fundamentally strong projects struggling to compete with the hype-driven nature of meme coins. With daily trading volumes reaching $295,400,000, meme coins are proving to be more than just a passing trend. The dominance of meme coins highlights a shift in trader behavior. Investors are increasingly favoring high-risk, high-reward assets over traditional altcoins, which often require deeper research and a long-term perspective. While some view this as a speculative bubble, others argue that meme coins provide accessibility and entertainment value that traditional cryptocurrencies lack. The rise of these tokens has also led to an increase in social media-driven trading, where trends and community sentiment dictate price movements. Solana has become the epicenter of the meme coin boom, benefiting from lower transaction fees and faster processing times compared to Ethereum. This has made it the preferred choice for launching and trading these highly volatile assets. As a result, Solana's network has seen record-breaking activity, generating $119,330,000 in monthly fees, further solidifying its position as a serious competitor in the blockchain space. Crypto market peaks often come with clear warning signs, and many of these indicators are flashing red. One of the most notable signals is the rise in Coinbase's App Store rankings. Historically, when crypto adoption surges among retail investors, it often signals that the market is reaching an overheated phase. Coinbase's ranking has climbed to 180 on iOS and 88 on Google Play, reminiscent of past bull market tops. Another indicator is the sudden influx of celebrity and corporate crypto endorsements. In previous cycles, big-name figures have jumped into the market just as prices hit unsustainable levels. When mainstream brands and influencers begin heavily promoting crypto, it often means that smart money is already taking profits. The same pattern is beginning to unfold, with more public figures discussing digital assets. Mass adoption discussions among non-investors have also been a key sign of market tops. When crypto starts becoming a common topic in everyday conversations, among those who previously showed little interest, it's often a sign that speculative mania is taking hold. This phenomenon has played out before, and it appears to be happening once again with increasing mentions of crypto in mainstream media and social platforms. With multiple indicators pointing toward a possible peak, the big question remains, how much further can the market climb before a correction? While these signals don't guarantee an immediate downturn, they serve as cautionary markers for investors. Former President Trump's renewed push for tariffs could have a profound impact on the U.S. economy and the crypto market. Historically, tariffs have led to increased costs for consumers and businesses, often triggering inflationary pressures. If Trump enacts new tariffs, the US dollar could weaken, making Bitcoin a more attractive store of value. Investors looking to hedge against potential currency devaluation may turn to Bitcoin as a safe haven asset. Tariffs can also influence Federal Reserve policy by creating inflationary concerns. A weaker dollar often leads to lower interest rates, which can drive investors towards alternative assets like cryptocurrencies. If Trump's policies result in an economic slowdown or inflation spike, Bitcoin could benefit as a decentralized and inflation-resistant asset. This scenario mirrors previous macroeconomic conditions that have fueled crypto adoption. Beyond tariffs, Trump's stance on Bitcoin has been historically skeptical, yet his economic strategies could inadvertently support the crypto market. If traditional markets face instability due to new trade restrictions, capital may flow into digital assets. Additionally, if Trump embraces a more lenient approach to crypto regulation, it could drive institutional adoption and increase Bitcoin's legitimacy on the global stage. The impact of tariffs on Bitcoin could be more significant than many expect. Historically, economic policies that weaken the US dollar tend to benefit decentralized assets like Bitcoin. If tariffs lead to inflation, investors will seek alternative stores of value, and Bitcoin has repeatedly proven itself as a hedge against currency devaluation. With USDT and USDC minting more stablecoins, liquidity continues to flow into the crypto market, signaling strong demand. Beyond inflation, tariffs can slow down global trade, affecting economic stability. If businesses struggle with increased costs, investors may look for ways to preserve capital outside of traditional markets. Bitcoin's borderless and deflationary nature makes it an attractive option during times of economic uncertainty. The more restrictive the financial environment becomes, the more crypto gains traction as an independent financial system. Previous market cycles show that Bitcoin thrives when traditional markets face turbulence. A weaker dollar could drive Bitcoin's price higher, as seen in past cycles where economic instability pushed crypto adoption. Historical data suggests that as economic policies become more restrictive, Bitcoin's value proposition strengthens, leading to new capital inflows. Investors analyzing macroeconomic trends may view Bitcoin as an increasingly viable asset. Will the economic impact of tariffs be the catalyst for Bitcoin's next major surge? As history has shown, economic uncertainty often fuels demand for decentralized assets. With the possibility of tariffs shaking global markets, Bitcoin could be on the brink of another breakout, further solidifying its role in the modern financial landscape. A long-term strategy in crypto is often the key to success, rather than reacting to short-term price movements. Bitcoin's historical cycles show that each bull run follows a similar pattern, with periods of correction paving the way for new highs. Investors who understand these trends position themselves ahead of the curve instead of being shaken out by volatility. With Bitcoin's past performance showing significant gains over each cycle, adopting a patient mindset can be highly rewarding. Data from previous cycles highlights a consistent growth trajectory. The first major cycle saw Bitcoin go from $1K to $20K, the second from $10K to $69K, and the current one could push towards the $200K mark. While short-term price action can be unpredictable, the long-term trend remains clear. Understanding these cycles helps investors manage risk and capitalize on Bitcoin's long-term appreciation. Many traders fall into the trap of overtrading, attempting to time the market perfectly. However, history has shown that holding through the volatility often yields better results than trying to predict every peak and dip. Institutional investors, hedge funds, and high-net-worth individuals recognize Bitcoin's long-term value and continue accumulating despite market fluctuations. The Taylor approach reinforces the notion that patience and discipline are key to crypto success. The pieces are coming together for what could be Bitcoin's next major breakout. From shifting economic policies to the rising dominance of metacoins, the crypto market is evolving faster than ever. We've covered everything from Trump's tariff strategies to the signs pointing toward a market peak. Whether Bitcoin is on the verge of another explosive bull run or we're in for more turbulence, one thing is certain: opportunities are everywhere for those paying attention. If you found this video valuable, make sure to drop a like and share your thoughts in the comments. What do you think will happen next in the market? Will Bitcoin break out sooner than expected? Or is there another shakeout ahead? Your insights and predictions matter, and we'd love to hear from you. Don't forget to subscribe and turn on notifications so you never miss an update. We bring you the latest insights on crypto every week. Thank you for watching this, and I'll see you in the next video.